Hi, I'm Jason. If you're facing foreclosure and you want to fight to save your house, but you cannot afford a lawyer, then I've got some good news for you. Now you can do it yourself and save thousands of dollars in legal fees. And it's not as hard as you might think. In fact, it's really quite easy. So if you're interested in saving your house and possibly winning a major settlement against your lender for mortgage fraud, then Fraud Stoppers Foreclosure Defense System is for you. To find out more, simply visit www.fraudstoppers.org and download your free copy of our ebook, Foreclosure Traps, Pitfalls and Swindles. Then after you get all the facts, you can decide for yourself if this is the right opportunity for you. Remember, it's not over until you win, so don't give up without a fight. Thanks for watching and have a nice day.
What if everything you knew, every comfort, every security were ripped away from you in a moment of time? What if the very place you spent watching your kids grow up, sharing holidays, and making memories was suddenly stolen from under your feet? America is experiencing a foreclosure epidemic. Due to an increasingly corrupt banking system, images such as these have replaced the American dream. Foreclosure isn't just happening to someone else somewhere else. It's now in your own backyard, and yes, it affects everyone. It only takes a temporary loss of work or a short-term illness to lose everything you've worked for. Think it couldn't be you? Think again. The Murrays experienced an unexpected reduction in income. Shortly thereafter, they almost lost their youngest daughter due to undetected type 1 diabetes. They were now facing not only less income, but astronomical medical bills. Aware their bank advertised to help in these situations, they asked for a modification to their adjustable rate high-interest loan. The bank promised they could cut their payment in half and help them stay in their home. The only problem? The bank lied. Instead of lowering it, they raised their payment by several $100s per month, making it impossible for the Murrays to keep up. The very people who said they were helping them were actually forcing them into foreclosure. Their house was sold on the auction block. The Murrays turned to Vanessa Fluker, an attorney known for her expertise in these matters. Although Bank of America had accepted nearly $7 billion from the government for modifications, these superbanks were actually using these funds to crush powerless homeowners like the Murrays. Further impeding this family's efforts, their escrow payments were set at more than 2.5 times that of prevailing rates for the area. Still, the Murrays were determined and faithfully made those payments time and time and time again. They made several offers to Bank of America at or more than the appraised value. The bank ignored those offers and continued their efforts to evict the Murrays. In response to public outcry made on behalf of the Murrays, the office of the CEO for Bank of America reached out to them, expressing a desire to help work out a modification. But upon calling the bank, the Murrays were instead told nothing could be done because they were in litigation, something the bank knew before they wrote the letters. The Murrays then wrote the bank's president, Brian T. Moynihan, directly appealing to him for his help. By this time, the Murrays had paid almost $43,000 into their escrow account. No further word from Mr. Moynihan. After fighting for more than 2 years, the Murrays had their final court hearing on April 24, 2013. Their attorney requested the escrow money be returned to them and that 60 days be allowed before the eviction to give them a fighting chance with Bank of America. The court spent no time deliberating, however, and summarily awarded the entire escrow money to the bank. The Murrays have been given 10 days to vacate the premises or they will be set out bodily with their belongings. What if the place you spent watching your kids grow up, sharing holidays and making memories, was suddenly stolen out from under you? On May 14th at 2:30 in the afternoon, this unthinkable nightmare became a horrifying reality for Matthew and Beverly Murray and their family. They saw the reflection of lights flash through their windows as sheriff cars pulled in front of their house. The Murrays' yard had just been freshly mowed as usual. Mrs. Murray had just finished watering her plants. The Murray's youngest daughter was next door and sent a text to her dad. All it said was, "Police." An officer knocked on the door. When Mr. Murray answered, he could see she was backed up by another deputy, a plainclothes detective, and 3 men sent by Bank of America to evict them and lock them out of their home. What's perhaps most appalling, the Murrays had paid $43,000 to the courts in escrow payments in just 2 years. So why did the bank nor their attorney make any attempt to work with the Murrays on a modification after promising to do so? Because this is standard operation for Bank of America. Almost all of the tax-free dollars they took from the government to facilitate modifications is being used to wrongfully evict homeowners. "Mr. Murray," she said, "you and your family have to leave now." Not unlike millions of Americans, the Murrays experienced an unexpected reduction in income. Shortly thereafter, the Murrays' youngest daughter almost died due to undetected type 1 diabetes. They were now facing less income and astronomical medical bills. They asked the bank for a modification to their adjustable rate high-interest loan since they advertised regularly to help people in the Murray situation. In the end, they raised their payments by hundreds of dollars per month. The Murrays were being forced into foreclosure by the very people who were pretending to help them. In October and November of 2012, the Murrays received letters from Bank of America offering to help them. One stated they would assist them in obtaining a modification on or before December 12, 2012. But repeated calls only produced more dead ends for the Murrays. After speaking with people who have been on the inside, the Murrays now realize this is by design. These are carefully crafted strategies devised by the banks to rob people of their homes. It's evident Bank of America never had any intention of working with the Murrays. Not one of the many contacts the Murrays had made to Bank of America's Office of the President, nor the thousands of calls and letters made on their behalf, persuaded Bank of America to keep its promises. The bank was employing a tried-and-true deception called dual tracking. They were reaching out to the Murrays with one hand, but evicting them with the other. Bank of America has this one mastered. Bank of America was further defrauding the Murrays by coding their file as being in litigation when it was not. This effectively prevented the Murrays from talking to any of the Bank of America representatives who had contacted them until they could complete the eviction. Each time the Murrays attempted to pursue their modification, the representatives from the Office of the President, Brian Moynihan, simply told them they couldn't speak with them. However, a critical slip of the tongue by 2 employees of Bank of America resulted in them admitting to the Murrays there had been in fact several cases open for modification review. One as far back as November 2012, and another as recent as May 8, 2013. We have obtained an email written by Bank of America's attorney to the Murray's attorney in which he vehemently denies a case for modification review was ever open. This completely contradicts what was told to the Murrays from Mr. Moynihan's office. When the Murrays tried to speak with these same individuals again, Mr. Moynihan's office repeatedly prevented them from doing so. The Murrays shared their story in an interview which was to air prior to their eviction on an ABC affiliate. It was discovered later that the story had been killed. Their informant simply stated there are people who need your story to go away. Only days after the Murrays were evicted, they watched from next door as people came in and out of their house preparing it to be sold. The Murrays called Bank of America again to question why they had chosen to evict them and never even attempted to pursue the modification they had promised. Even after emails from the Murrays' counsel to the bank's counsel verified that this case was not in litigation, representatives from Bank of America insisted that it was. When the sheriff arrived at the Murrays, they knew that Bank of America had dealt what they believed was their final blow in defrauding them of their home. With the help of complicit courts and money-hungry lawyers, the same is happening to millions of Americans. There simply is no incentive for banks to work with homeowners. There's not enough profit in it. For the Murrays, their minds went blank trying to figure out what to take from their home. It was like watching a horror movie play out before their very eyes. It was surreal to think that they had paid all this money, and not only did the bank take their home, but their entire escrow with it. They began grabbing everything they could and set it out of the house before the bank could lock them out. Driving past their house later that night, the Murray's daughters mentioned how odd it was that they could still see their curtains in their windows, but couldn't go home to their own beds. This is an outrage. It should have never been allowed, not by the courts, not by our lawmakers, and certainly not by us as Americans. This defrauding of America must come to an end. But the only one who can stop this behavior is you. The courts nor our lawmakers are doing a thing to prevent it. Laws are being violated, and families are being put into the streets. The Murrays may be temporarily without a home, but they are not giving up their fight. They remain resolute to regain their home, but they need your help. Wrongful evictions are on the rise, so this situation affects all of us. The only way the Murrays can be helped is if others care enough to get involved. Please call Bank of America and demand they stop defrauding the Murrays and return them to their home. Refer to loan number 023-732-976. Also write Brian Moynihan, President and CEO for Bank of America, at brian.t.moynihan@Bank of America, demanding the same. The corruption must end. We can save the Murrays' home if we work together. So ask yourself, is 10 minutes of your time worth making a difference in a family's life?
If there was a question about whether we're headed for a second housing shock, that was settled last week with news that home prices have fallen a sixth consecutive month. Values are down nearly to the levels of the Great Recession. One thing weighing on the economy is the huge number of foreclosed houses. Many are stuck on the market for a reason that you wouldn't expect. Banks can't find the ownership documents. It's bizarre, but it turns out that Wall Street cut corners when it created those mortgage-backed investments that triggered the financial collapse. Now that banks want to evict people, they're unwinding these exotic investments to find that often the legal documents behind the mortgages aren't there. Caught in a jam of their own making, some companies appear to be resorting to forgery and phony paperwork to throw people down on their luck out of their homes. In the 1930s, we had bread lines. Venture out before dawn in America today, and you'll find mortgage lines.
The story will continue in a moment.
These folks on the street aren't homeless. They slept on the sidewalk because they want to keep their homes. Facing foreclosure, they camped out in January to get in line to beg their bank for lower payments on their mortgage. So many in the country are desperate now that they have to meet in convention centers coast to coast.
We understand people have been here for a day or two. For 2 days.
2 and a half.
This was Los Angeles, where 37,000 homeowners gathered. And this was Miami in February, where the worry was visible and shared by 12,000 more. The line went down the block and doubled back twice. Dale DeFreitas lost her job. Now she fears her home is next.
It's very emotional because I just think about I don't want to lose my home.
I really don't.
It's your American dream.
It was, and it still is.
Welcome to Not to Save the Dream. Welcome, everybody.
These convention center events are put on by the nonprofit Neighborhood Assistance Corporation of America, which helps people figure out what they can afford and then walks them across the hall to bank representatives to ask for lower payments. More than half will get their mortgages adjusted, but the rest discover that they just can't keep their home. And for many, that's when the real surprise comes in. Turns out these banks, which demand borrowers have all of their paperwork just right, these same banks have fouled up their own paperwork to a historic degree.
In my mind, this is an absolute intentional fraud.
Lynn Simoniak is fighting foreclosure, and while trying to save her house, she discovered something we did not know. Back when Wall Street was using algorithms and computers to engineer those disastrous mortgage-backed securities, it appears they didn't want old-fashioned paperwork slowing down the profits.
This is back when it was a white-hot, fevered pitch to move as many of these as possible.
When you could make a whole lot of money through securitization, and every other aspect of it could be done electronically, keystrokes. This was the only piece where somebody was supposed to actually go get documents, transfer the documents from one entity to the other. And it looks very much like they just eliminated that step altogether.
Simoniak's mortgage had been bundled with thousands of others into one of those Wall Street securities traded from investor to investor. When the bank took Simoniak to court, it first said that it had lost her documents, including the critical assignment of mortgage, which transfers ownership. But then there was a courthouse surprise.
They found all of your paperwork more than a year after they initially said that they had lost it.
Yes.
Did that seem suspicious to you?
Yes, absolutely. And what do you imagine? It fell behind the file cabinet? Where was all of this? We had it, we own it, we lost it, and then more recently, everyone is coming in saying, hey, we found it. Isn't that wonderful?
But what the bank may not have known is Lynn Simoniak is a lawyer and fraud investigator with a specialty in forged documents. She has trained FBI agents.
Did you ask for copies of those documents?
Yes.
And what did you find?
When I looked at the assignment of mortgage, and this is the assignment, a copy from my case, I looked at even the date they put in, which was 10/17/2008, was several months after they sued me for foreclosure. So what they were saying to the court was, we sued her in July of 2008, and we acquired this mortgage in October of 2008. It made absolutely no sense.
Curious, she used her legal training to go online and researched 10,000 mortgages.
Then I began to find the strange signatures.
One of the strangest signatures belonged to the bank vice president who'd signed Simoniak's newly discovered mortgage documents. The name is Linda Green, but on thousands of other mortgages, the style of Green's signature changed a lot, and even more remarkable, Simoniak found that Linda Green was vice president of 20 banks, all at the same time.
All within the same week. I mean, this is a very, very active person. And you can
Where did all those documents come from? We went searching for the Linda Green, and we found her in rural Georgia. She told us she's never been a bank vice president. In 2003, she was a shipping clerk for auto parts when her grandson told her about a job at a company called Docs, D-O-C-X. Docs, once housed here in Alpharetta, Georgia, was a sweatshop for forged mortgage documents.
They were sitting in a room signing their name as fast as they possibly could to any kind of nonsense document that was put in front of them.
Docs and companies like it were recreating missing mortgage assignments for the banks and providing the legally required signatures of bank vice presidents and notaries. Linda Green says she was named a bank vice president by Docs because her name was short and easy to spell. As demand exploded, Docs needed more Linda Greens.
So you're Linda Green?
Yes. Can't you tell?
Chris Pendley worked at Docs at the same time and signed as Linda Green.
When you came in to Docs on your first day, what did they tell you your job was going to be?
That I was going to be signing documents for using someone else's name.
Did you think there was something strange about that in the beginning?
Yeah, it seemed a little strange, but they told us, and they repeatedly told us that everything was above board and it was legal.
And your previous experience in banking?
None.
In legal documents?
None.
There really were no requirements for the job.
Correct.
You had to be able to hold a pen.
Hold a pen.
But you were signing these documents as if you were an officer of the bank.
Correct.
How many banks were you vice president of in a given day?
I would guess somewhere around 5 to 6.
What were you getting paid for this?
I'm embarrassed to say, $10 an hour.
$10 an hour, that's not much for a guy who's vice president of 5 banks.
Yeah, I was very underpaid for my status in the companies.
Pendley showed us how he signed mortgage documents as Linda Green. He told us that Doc's employees had to sign at least $350 an hour. Pendley estimates that he alone did 4,000 a day. This is also Linda Green. Shawana Crite worked at Doc's and says that she both signed and notarized the mortgage documents.
What was the role of the notary?
We were to make sure that everyone on the document was who they said they were and notarize the documents.
But the people who were signing the documents weren't who they said they were.
Right.
So if Chris Pendley was signing for Linda Green, you'd notarize that document.
Yes.
And you were told that was okay.
Yes.
What do you know now?
That it wasn't right.
The real Linda Green didn't want to be interviewed, but she said that some of the bank vice presidents at Doc's were high school kids. Their signatures were entered into evidence in untold thousands of foreclosure suits that sent families packing.
So it was a common practice in the last few years to flood the courts with these documents.
And look at some of the junk the courts were flooded with. Sometimes the document mill didn't even bother to fill in the name of the supposed owners. To them, it seemed like a joke.
Instead of the name of the bank here that was acquiring the loan, this one says bogus assignee for intervening assignments. That's who acquired this loan.
This was an actual document that was in litigation?
Yes. And what corporation assigned this loan? A corporation identified as a bad beanie. Excuse me, when I saw that, I was just absolutely amazed.
What does that mean, a bad beanie?
It could possibly mean a bad beneficiary. I have no idea what they meant. So here's the same woman, Linda Green, and this time, instead of being a vice president of American Home Mortgage Servicing, she's vice president of a bad bean.
Simoniak says that the banks whose paperwork was handled by the Doc's forgery mill included Wells Fargo, HSBC, Deutsche Bank, Citibank, U.S. Bank, and Bank of America. We contacted all of them, and each said that it farmed out its mortgage servicing work to other companies, and it was those mortgage servicing firms that hired Doc's. Doc's was owned by a company called LPS, a $2 billion firm that calls itself the nation's leading provider of mortgage processing services. LPS told us that when it found out about the phony signatures in 2009, it shut Doc's down. The FBI and several states are investigating. There were 1 million foreclosures last year, and there will be another 1 million this year. Those lawsuits are forcing open those bundled mortgage-backed securities that Wall Street cooked up in the mid-2000s, and they're exposing a lack of ownership documents all across the country.
It's astonishing to me that this became as pervasive as a problem that it is.
It got sloppy.
It got very sloppy.
Sheila Bair is one of the government's top banking regulators as chairman of the Federal Deposit Insurance Corporation.
You just described it as pervasive.
Yeah, it is pervasive. It absolutely is pervasive. And it was just a matter of cutting corners, not spending enough money, not having the quality controls.
Incompetent banking back then is causing foreclosure ghettos today. Although banks say the courts have been accepting their paperwork, now that's changing as desperate homeowners countersue the banks over the document fiasco. This leaves houses unsold indefinitely, undermining the recovery.
I'm very worried about if this starts getting out of hand, the kind of impact it will have.
These are lawsuits by homeowners
Yes,
who are
yes.
being foreclosed upon, saying,
Yes, or are in the process or have already been foreclosed on.
saying
yes.
prove it.
Yes, exactly.
Prove that you own this.
Exactly.
How big an issue is that going to be? There are 30,000
Well,
today.
I think this litigation could easily get out of control, and we would like to get ahead of it. We're already feeling like we're falling behind it.
Chairman Baer thinks rotten mortgage documents are so threatening to the economy that the government should force banks to pay into a massive fund.
But you think there needs to be a cleanup fund,
I do.
just like you would
Cleanup
have
fund's a good word for it,
for
yes.
a natural disaster?
Yes, somewhat like that. Yes, this is one of human making, but yes.
You don't want to give an exact dollar amount for this cleanup fund, but what are we talking about? Is it billions?
It would be yes, I would assume it would be billions, yes.
Billions of dollars.
Yes, absolutely.
Chairman Baer's proposed cleanup fund would pay homeowners to accept a bank's ownership claim without a lawsuit. She says that this could be cheaper for the banks than trying to recreate the missing documents legitimately and not through the document mills.
I think eventually the bank could prove who owned it, but it would take a lot of time and expense.
You know, none of the major banks were willing to sit down with us and talk to us about this, not even the American Bankers Association.
I'm sorry to hear that.
Why do you think that is?
They're feeling very defensive now, and so I can only assume that is the reason why they declined.
The banks are defensive because all 50 state attorneys general want to punish them. The states are seeking about $20 billion in damages for what they say is the irresponsible, perhaps criminal way that some mortgage companies handled what is, for most folks, the most important investment of their lives.
I'm going to give you a tour of our house. Ron's parents helped him purchase this property, so it was very near and dear to him.
And I just knew that I wanted my American dream to own my own home. And I was ecstatic when I was told that I had been approved for a $150,000 loan.
The day I bought my house, it was both exciting and scary. Well, both of my sisters were taking pictures. They were just snapping away. They were just so proud of me.
Lenders are poised to take back more homes this year than any other.
Foreclosure at an alarming rate.
My kids have always looked up to me.
Millions of foreclosures have been.
And for something like this to happen where I built this dream house,
Times for the families.
and then it's just crumbling right before our eyes.
Because courts simply want to process foreclosures as fast as possible.
Not knowing when they're going to come and snatch it from under our feet.
A 2011 National Commission reported that since the mortgage-backed Wall Street collapse began, 4 million families have lost their homes to foreclosure. Retirement accounts and life savings swept away. We've seen a tidal wave of charges and lawsuits leveled against the nation's big banks who, at the center of the collapse, both financed the subprime lenders and then reaped huge profits from the sale of trillions of dollars in toxic securities. Too big to fail, the big banks got the government to bail them out and return them to profitability. Yet numerous attempts to stabilize our tumbling housing market and help the average American have utterly failed. Today, 14 million homeowners owe more on their mortgages than their homes are worth. Most of them are at risk of losing their homes. Until we stop foreclosures, housing values will continue to fall, and virtually all Americans, whether struggling to hang on to a home or not, will pay a price.
A foreclosure creates a remarkable amount of damage. You have depressed property tax values, payments to the community, which will impact the schools, impact the police, impact all kinds of city services. If anybody didn't realize the importance of the mortgage market to our community and to our country before 2008, everybody understands it now.
for so many people around this country, the essence of the American dream is owning your own home.
The U.S. housing market continues to be a cause for concern.
Here in the Valley are losing their homes to foreclosure at an alarming rate.
2011 will be the greatest foreclosure year. It will surpass 2010.
I firmly believe that my conduct was correct.
I do not think that we did anything wrong.
I don't have regrets about doing things that I think were proper.
You have a crisis of confidence in the democracy. We are at that place. It's serious. Some people get away with creating acts that the rest of us go to jail for, and there's no penalty for it, and there's no redress for it.
We did a study actually looking at the experience of Latino families throughout the country that had gone through foreclosure. So not only they lost their equity and the down payment, they also went through their retirement savings, they maxed out their credit card, the children college education. By the time they lost the home anyway. They were left with nothing.
All of us are paying a price for this home mortgage crisis. And all of us will pay an even steeper price if we allow this crisis to continue to deepen.
But it has deepened.
Facing foreclosure, they camped out in January to get in line to beg their bank for lower payments on their mortgage.
The president had created a program that gave banks incentives and guidelines to modify loans.
The line went down the block and doubled back twice.
But the program was voluntary, and so the banks lacked a commitment to it. The great majority of applicants, though eligible for loan modifications, were stymied in their attempts to get them.
So we've been fighting them, trying to get loan modifications, and they'll come back and say, well, you know, your unemployment does not count.
Either I got hung up on, connected to another department that never answered, disconnected.
I think we've sent paperwork up no less than 6 times.
We hear stories about people's documents being shredded. We heard one story about a servicer that at the end of the day, anything that was on the fax machine, because of privacy concerns, they were shredding it.
Don't look now, but there's something funny going on over there at the bank, George.
Once upon a time, the bank that loaned you money to buy your house had a stake in your success.
The money's not here. Well, your money's in Joe's house. That's right next to yours. And in the Kennedy house, and Mrs. Maitland's house, and 100 others. What are you going to do, foreclose on them?
Today, a Wall Street investor owns your mortgage, not the bank. The bank you make your payment to is simply a service agent. As servicers, they have an interest in making fees, and banks make more money in foreclosure fees than they do in modifying your loan.
So for servicers, the real incentive is to try to collect payments as cheaply as possible to make the most money, even with the money that the administration has put forward to say, please do modifications, here's $1,000 a modification. In many cases, it's still not as much as they would make in the foreclosure. And so for the servicer, even though the modification would be the right thing for the homeowner, the foreclosure is actually going to be the right thing for the servicer.
America's big banks have shown that they're not only too big to fail, but also too big to care about how their actions affect average Americans. But that may change, since they've been discovered to have quietly circumvented the laws that protect the property rights of millions of Americans.
More trouble tonight for the nation's largest mortgage lender. California and Illinois are suing Countrywide Financial for allegedly luring borrowers into risky loans they could not repay.
FA is suing Bank of America, B of A Merrill Lynch, and Barclays for allegedly misrepresenting the quality of mortgage securities that it sold at the height of the housing boom.
A massive mortgage fraud investigation's underway in Guilford County. The Register of Deeds office says hundreds of documents involving home loans are potentially fraudulent.
When a North Carolina official examined his own record system, he found them to be riddled with illegitimate robo-signed title documents.
I had just witnessed the enormous and callous disregard by a number of our nation's largest mortgage and lending institutions for the rule of law.
Let me put it like this. If I would have signed 1 or 2 of those documents fraudulently or forged signatures, I'd be arrested. I'd be prosecuted. I might even be put in jail. As a result of the 60 Minutes investigation, one of the robo-signers that they focused on was a signer named Linda Green. And as you can see, in my investigation, there were over 2,000 documents that we found with Linda Green signatures. And as you see here, there were between 4 to 15 different signature variations in these documents.
Who is going to want to buy this property? Once we decide that a document has been forged, meaning somebody else has signed someone's name on that document, at law we say that document actually doesn't exist in the public record. So even though visually you can go and look it up in the records office, it disappears out of the chain of title. So now you have instability of title for that property.
And then we hear a little small town guy in Greensboro, North Carolina, named Jeff Thigpen, have a press conference, talk about the fact that he had found over 4,000 documents that were forged in his office.
Rooted in what I believe is a betrayal of public trust.
We called for an immediate stoppage of foreclosure actions related to Doc X. That didn't happen. And I take that silence for complicity. And I think that they know, or they should have known, what was going on. And they should have done something about it. And they didn't. And as a result, millions of Americans are living with the consequence of it today.
The day I bought my house, the attorney would just flip the page and say, sign right here, sign right here, sign right here. And I'm really thinking to myself, what in the world have I gotten myself into?
Purchasing a home is not only one of the most important decisions a family makes, but it's also one of the most complicated decisions.
I was ecstatic that I was even going to be a homeowner and have my American dream. I was not educated and did not know that I actually really needed to have someone to represent myself.
A lot of folks were being sold what are now commonly called subprime mortgages that had terms that you wouldn't want if you were a prime borrower.
There were lenders who were selling these loans knowing that the person who was getting that loan was never going to be able to afford the payment once it got beyond 2 years.
And they bundle all of those mortgage payments into what are called mortgage-backed securities.
Some borrowers, because it takes time to make their loan, they would get shoved into a subprime loan because it was more lucrative. What you would also see later on in the boom was anywhere from about 30 to 50% of people who were getting a subprime loan could have qualified for those prime rates. They were being told this can get you into a house that you otherwise might not have been able to afford. It's what everybody does. Housing prices are booming. You don't want to miss this wave. So get into it now, build your home equity, and then we'll refinance you to a lower rate later.
After 2 years, or before the 2-year period expired, we were supposed to try to get the loan refinanced to see if we can get a fixed rate. That was the consensus given to all of the homeowners in my division, that we were supposed to try to get the loan refinanced. That was just something to get us in the door to acquire the house.
We know that we shouldn't all trust everything that is told to us, but we've all been tricked once or twice in our lives, and we've regretted it after it happened. And I know that the people who ended up in these mortgages that took advantage of them, that their sense of regret exceeds anything I can imagine.
My kids have always looked up to me, and for something like this to happen where I built this dream house and then it's just crumbling right before our eyes, it was a total embarrassment to me. So. And to my kids, I felt like a failure. I'm going to stand up for what I believe in. I'm going to stand up against this, and I'm going to fight back.
Our purpose in organizing is to organize with our folks in our communities to address these kinds of questions and to give people a sense of possibility that they can change it. In a democracy, we have a right of agency. And that is to organize ourselves change something.
This just may be a formula you can follow to save your dream house. Tonight, we introduce you to a woman who was freed from foreclosure because she did her homework and ultimately beat the bank. Adanya Castro is headed to her attorney's office, victorious after waging a 2-year David and Goliath type struggle to save her mom's home from foreclosure.
The mortgage got wiped out, and so I have no mortgage payment. Everything was completely satisfied.
How'd she succeed in saving the home where so many others have failed?
I took it upon myself to pull all our closings, all our public record documents, and I started comparing paper to paper.
Then she says she noticed something in the hundreds of documents she'd gathered.
This person's name appears in this loan, and out of 5 loans that I had, that person came out 5 times. But the signatures varied 5 times, so that made me suspicious.
She'd been working on her own, but now she knew she needed the help of an attorney experienced in fighting foreclosures.
I already had all these documents, I just didn't know what to do with them until I actually was able to meet Omar, and we put everything together and said, okay, we have a case.
A case they ultimately won before a judge.
It appeared to have been forged signatures on some of those documents. The moment that we brought that information to light and we brought it to the judge, the parties resolved the case. And in that particular case, the bank agreed to forgive her entire mortgage debt.
Attorney Arcia says the foreclosure documents indicated this was a case of robo-signing. That's where one or a few employees sign foreclosure paperwork in sort of an assembly line process. It's a practice the state attorney general and Florida's highest court came down hard on lenders and their lawyers for.
The Supreme Court now woke up and said, listen, we're not going to let you file a foreclosure unless you have a signature on there by an authorized representative of the lender who's going to be held accountable for any fraudulent information.
Now to the millions of homeowners being squeezed in this financial crisis and facing foreclosure. But as NBC's Carrie Sanders explains, the news doesn't have to be all bad if you know what you're doing. Carrie, good morning to you.
Well, good morning, Meredith. This is what the foreclosure crisis looks like in the United States. Here in Miami-Dade County, 80,000 civil cases filed. 60,000 of these are foreclosures. But for homeowners who are in foreclosure process, there's a twist now. They're fighting back and winning.
From there to here and from here to there.
Desperation?
I don't recommend anyone not to make payments.
Meet salvation.
My belief is that you will end up with your home.
At no charge,
a fixed rate mortgage.
50 lawyers from the Miami-Dade Bar Association offered to help homeowners facing foreclosure.
To tell you about what the defenses are.
More than 300 folks showed up.
Have you been sued yet?
Yes.
Okay.
Among them, Herman Mora.
Was this an 80-20?
It was an 80-20.
His exotic mortgage, typical of those that helped fuel this crisis. 2 loans at 2 rates, $485,000 for a home that's now valued at only $311,000.
Once my employment, I get another job because that's what I'm trying to do.
Complicating matters, Herman's company had cutbacks, and he's now unemployed.
My goal is to stay in this house.
If you've ever signed a mortgage, you know it's lots of pages of small type. You're told to sign here, initial here, initial here, and then you walk away confused. But the experts say in most cases, the documents contain errors, and even the smallest mistake can give someone in foreclosure the upper hand.
All I need to find is $35 worth of mistakes to cancel a mortgage in defense to a foreclosure.
$35.
That's correct.
How easy is that to find?
It is very easy to find.
Too good to be true? Ask the Mosby family. Foreclosed on, they contested using the Federal Truth in Lending Act, won in court, and in an extreme case of turnabout, they were awarded their house mortgage-free.
I've just never imagined that it would end up like this. Ever.
I've got some great news for you, so pay close attention because you're about to discover how to save your house from foreclosure, eliminate your mortgage, and get paid cash while doing it. But first, to clear up any confusion, Let me tell you what Fraud Stoppers is not. Folks, we're not a law firm. We're not pretender defenders who only care about making a buck. And we're not some greedy investment company selling loan modifications or peddling short sales in order to buy your house for pennies on the dollar. Fraud Stoppers is a unique company that can help you save your house and get the financial settlement that the law says you're entitled to. Folks, we founded Fraud Stoppers because when we discovered the truth behind the mortgage fraud the too big to fail banks were committing, we knew something had to be done. I'd like you to do me a favor and put yourself in the position of the average person facing foreclosure. What are your options? You could try to sell your house before you run out of time. That's if you have enough equity. Then again, if you owe more than your house is worth, your lender will have to agree to a short sale. But there's good reason why they would rather foreclose on you than do something like that. On the other hand, if you're looking to save your house, you could ask your lender for a loan modification or repayment plan. But again, there's good reason why they would rather foreclose on you than do something like that. And I'll let you in on a little secret here. If you agreed to a loan modification, there's a real danger that you'll waive your legal rights to sue your lender for mortgage fraud. Not to mention the fact that loan modifications are designed to fail. And as a last resort, you could try bankruptcy. That might buy you some time. Listen, if none of these options sound good to you, then Fraud Stoppers may have what you're looking for. Did you know that a government audit proved that 83% of mortgages contain significant legal violations? Did you know these legal violations can stop a foreclosure dead in its tracks? In fact, one expert discovered that in nearly 50% of foreclosure cases, lenders do not have the documents that's required by law to foreclose on homeowners in the first place. And don't take my word for it. As seen on TV, 60 Minutes aired an episode called The Next Housing Shock, which revealed the fact that banks are not only missing documents, but they've been caught forging signatures on fake documents to illegally foreclose on homeowners. You can see the FDIC report and the 60-minute episode for yourself at fraudstoppers.org. Folks, if you knew your lender committed robo-signing, would you let them get away with it? Would you let them steal your house? Imagine if your lender couldn't produce your original note or mortgage. Would you give up without a fight? What if I told you that the law entitled you to financial damages? Would you stand up and claim what's rightfully yours? If so, Fraud Stoppers Foreclosure Defense System is for you. Here's why. This turnkey system will help you sue your lender and their law firm pro se, saving you time and money. To get started, all you have to do is sign the documents and file them into the court record. These powerful proven lawsuits demand financial damages for mortgage fraud that can add up to 3 times the original amount of your loan. For example, if your loan was $100,000, your federal civil lawsuit could demand up to $300,000 in monetary damages. Plus, our experienced coaching and customer support staff will walk you step by step through the entire process, so you have nothing to worry about. Look, if you're worried because you're facing eviction, don't be. If you're worried because you owe more than your house is worth, don't be. Listen, if you're worried because you think you're running out of time or options, don't be. Remember, filing the right document at the right time can stop your foreclosure and put cash in your pocket. The sooner you get started, the sooner you can breathe a sigh of relief. Because the wheels of justice turn slowly, and in this economy, that's a good thing. Getting started is easy. Just go to fraudstoppers.org and click the Get Started Now button, or download your free copy of Foreclosure Traps, Pitfalls, and Swindles, and you'll learn the inside secrets your bank does not want you to discover, like recent court decisions of homeowners beating their foreclosures and walking away mortgage-free. Other ordinary homeowners have already done this, and now you can too, if you take action. By the way, there's even an opportunity for you to earn extra cash for simply sharing this information with other homeowners like you who are interested in saving their homes too. But don't wait too long, because in foreclosure, timing is everything. So get started today. We look forward to your victory. Thanks for watching, and have a great day.